Hi, Jonathan York Bay Financial Partners, looking at investment markets. Welcome back, sort of Happy New Year. Really, markets very interesting out there. We've seen some sort of talk now coming out of some of the Fed governors that potentially they could be looking at sort of pausing now for a while before the next rate increase. No, obviously, no real surprise. They did increase rates at the end of 2018. But really not quite interesting with the sort of increased market volatility. Obviously, you still got the sort of stash between the US and China in terms of a sort of potential trade war. You also got the government shutdown as well, which as that sort of drags on, potentially is damaging for the economy as well. But on the flip side, in the US, the latest jobs data really was very strong. It was over 300,000 jobs created. The market was looking for around 178,000. With a fall in sort of share prices and the backing up in sort of price earnings ratios, some of the valuations now on US equities look reasonably attractive. So far, it's been a little bit of a mixed bag. Citibank was slightly better on earnings per share. JP Morgan was a little bit worse, but it's just going to be interesting to sort of see how it sort of plays through. Now, against that backdrop, obviously, you've got the pretty major sort of implications with the US-China trade negotiations. They are still rumbling on, and potentially it looks like a deal really needs to be done. Certainly, China appears to be sort of slowing down a little bit, but that was anticipated. But also, as well, with this sort of government shutdown, the US economy really can be suffering pretty badly. Initially it was thought for every week the shutdown sort of was in place, that was about zero 0.1 shaved off GDP. That figure may now be higher than that, and the shutdown is now entering its sort of fourth week. Now, what is not helping really is that some of the facts coming out of the White House, some of these appear to be a little bit sort of stretched, to say the least. And some just appear to be, outright wrong. Also, what's quite interesting as well is how much interest rates in the US have backed up. If you look at it sort of mid 2018, there was a lot of sort of angst and worry as a 10-year note sort of pushed through 3%. There was a lot of worry about that and talking about sort of going as high as maybe 320, 340. US 10-year is now back around 270. It's a pretty major fall. And certainly does take a little bit of pressure off interest rates. That obviously has a knock-on effect for global interest rates as well. So really pretty interesting times in the US, and I say it's just going to be very interesting to see how it does sort of play through in the next sort of 2 to 3 months. Europe's pretty interesting as well. Now into 2019, Brexit, 29th of March 2019, as yet still hasn't been passed by the UK Parliament, and certainly Prime Minister May looks like she's got a pretty tough task to get that through Parliament. If that is rejected, then it really does throw it sort of all back into the melting pot. The opposition party in the UK, Labour, are now talking that if that deal is rejected by Parliament, then they call for a general election. That would then really add to the chaos, and really does look a little bit of a mess out there. But it's really quite interesting, because what's something the general public don't seem to understand is that the UK just can't leave the EU. There has to be some sort of deal put in place to sort of regulate trade, regulate sort of passport and sort of customs, etc. I say the general public just don't seem to understand that. They just think once the vote to leave was put into place and that was agreed on, the UK would then just leave the EU and that would be it. It is not as simple as that. In the EU as well, obviously you've got a little bit of concern over the Italian banking system. It's just going to be interesting to see, what sort of action the ECB takes on that and how they sort of play that. I suspect, given sort of previous circumstances, they will act sooner rather than later. Oil still finding a pretty rocky road out there. It's sort of come back from sort of mid-40s. WTI is now back above $50 a barrel, but really it's still pretty tough out there. Here in New Zealand, a little bit of a sort of a slow start to the year. Interest rates still look like they're on hold for a considerable time. That's obviously putting a little bit of pressure out there on sort of income assets. Certainly term deposits and bonds, are yielding pretty low levels. 4% if you're lucky. But if you are looking for income options, there are plenty of alternatives available out there in terms of sort of high dividend shares, etc. And if you're interested in discussing what's available, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. And we look forward to speaking to you soon.